right, all you devils, how are we doing today? All right, so where am I? It's October 25th, kind of middle of the day, late morning here, and given the volatility in the S&P, I'm not surprised that members were looking for an update on, we're going to look at both the longer term and the shorter term count on the S&P 500. So I have the continuous contract up here, right? So we've got December in front, but this will give us all our history, and we can see I've got just, as I would like to remind you, when Elliott is most helpful is when it's so obvious you can't miss it. So it's pretty hard to miss that, right? And then it's very technical. We had looked at this as a potential top in the market previously, just based off of, well, one, we have pattern, but two, a very common relationship in an Elliott impulse that we see here is for there to be parity between the length of the first wave projected from the pivot of the fourth wave. I get that right on there. There's 100%, right? It's pretty good. So, like literally out of a textbook for an Elliott count, it doesn't get much better than that. All right, so we have this nice channel now that I've drawn on this, but you can see here was the channel that broke. I'm just working. So this channel, all I'm doing is connecting this pivot here to this pivot. Now we have not actually tapped it, but that's a good. Those are the reference points throughout the entire move. Yes, we get a throw over here, not uncommon in a third. When you get the big push, here's the sell-off, and then we come up and we tag the upper. I'm using this upper parallel here to define that channel. So fairly good so far. Now we haven't gotten to test the lower end of it, but odds are likely that we will. Now we may note here that we get. It's not impossible. It's not uncommon to see these kind of patterns repeat. So we get the ABC with the truncated C wave into the 4 there, so that it's certainly something to consider that we might have something similar here if this is going to hold. So we get something along those lines there where we get this truncation if we're going to get an ABC if we're going to continue to go. Now, that's in the possible camp. What's more probable is that we're heading much lower, right? If we break this, so where would be the natural target if we've got this correctly identified? If this is our A wave, and we don't know for sure so it's either the A wave or it's the one wave of the A wave. So that's enough distance. So right now I did lean into that as the A wave, looking for the B anywhere from the 50 to the 786. Although it would not be uncommon for a retest of that channel that broke. So if we were to go that high with it, so let me take this off just to clear the chart. So if we look here from our pivot, if we've got the low here identified, so a push back up to tap that channel, to test that channel, depending on when we get it, that would be literally textbook perfect. We'd be heading towards much deeper levels down here. So here would be your first algo target, second and third, which would be very close to the 1618. All right, we know that the negative 100 here in red, as we look here on this angle, will be very close to the 1618. That would be an extreme. Again, I'm hypothetical here. We don't know that the B wave goes there. We don't know where we get the pivot, if we get a pivot. But if we were, and we were projecting down, all we're doing is just going swing low to swing high. We've got a completed impulsive structure, right? Clear as a bell. If we're going to correct it, the area we'd be anticipating that correction would be to the 50. Is also very common prior congestion level here. That was likely within the sub count of that third. Looks like that was significant here. So this would be the area if we're going to do a full correction. We're talking about 2380, we'll call it 2390 in that range. So a lot more downside to come if we're going to do this here. Now I'm looking at an 8-hour chart. Right, so first tell will be how do we respond when we get to this? What is in effect a trend line here? Are we going to come back? Well, we don't know if we're done here, but that will be a major test. If we get through that, then look out below. All right, so there's a couple of things we can do here. Let's go down to a 1 hour because this is fairly interesting down here, and we can bring in some of the training that we've just done. Now this is for members, YouTubers. You won't have this, but some of the Gann training that we've done, right? We can incorporate some of that. So I'm gonna just take some of this off here. Can I squeeze this anymore? I guess I can't. So let me try a 2 hour. See if I can get a little more squeeze on that, so we can see what's happening here. All right, so so as we change time frames, right, this gets a little distorted, so it's a constant retweak. So I get this right back on that pivot. Right here, I guess we use that pivot. Okay, so we've broken that channel that was the support on the way up from our 4 as to how we count this, right? There's some subjectivity, and it looks like the extension here is in the 5th. So we have a potential significant and major top in play. So what coming straight down, the first thing we've done off of that, we can see a nice 1, 2, 3, 4, the retracement. We push down, and is it yesterday? It looks like we've put in the low as we're trying to retrace that now. So let me clean up the chart here. Wanted to make that point that it's very, very common to, if a channel like that was so well established breaks, that if it does, that there's very commonly a retest of the edge of that channel, see if that's going to continue to be an influence in the market. And in this case, it would be prior support now becoming the resistance. Just a different way to look at support and resistance. So coming down here, let's pull this off. So, all right, not the prettiest one, but in terms of what our choices are, I would consider this essentially a double top. So the first move down, then there's our 2, there's the big 3. Now this is actually technical, so I'm going to go to the 30-minute here. And this is what we're anticipating. So if we look here, well, you got a couple of things. So given the shallowness of the 2, I would check both. So I would check from the absolute high through the 3, so front run on the 2, probably. If we pull from what is the 2 here, we didn't quite make the 618, but given the length of the 3rd and the shallowness of the 2, right, I'm inclined to check both here. We get a little ABC, we get that very shallow 2 wave here, but we don't even make, we don't even make the 38 before we go down. The market's so weak. Then we get our nice little 3 wave into the 4, so that's, it's a front run on the 50, which is common, right? As I always tell you, you never want your order sitting right on the 50. But if we're just trying to analyze what happened there, most likely we've got an algo that kicked in, and then look what happens at target, right? So no surprise. That should be zero surprise to anyone, whether you're watching on YouTube or you're a member, right? We've gone over this enough times. So you get the target by a couple of ticks, and now we're spending the time. This is the reaction off of that low. So it looks like a fairly solid 5-wave structure, although this is a little squirrely. I don't love it. I mean, I suppose you could maybe argue the case that the 2 is here because this is not technically a new high, but it just looks much more to me like it just doesn't play as well. Well, I suppose if you did that, then you bring it here as the 2 through the 3, that we're getting closer to the 4, but that's so close that I would use the dominant pivot because I know that's what an algo is going to use. So this likely the front run on it. Right, that's about as far as you'd want to give a 4 before the odds of making target are reduced. So likely the front run. And you can see coming down fairly clearly, we've got the same thing happening. Now we got to obviously change that degree. So let's get down. Oh God, I want what I want here. That's what I want. Let's go sub-micro so we can see that. So we have within this, we'll take this up a degree so it makes sense. Bear with me here. We'll go to micro. Okay, so 1, 2, whether the 1 is here, I actually think the 1 is here. All right, so I'm using this, but for the algo pull, I'm going to use the dominant. So from the 2 to the 3, it really doesn't matter at this point. That if this is the 50, this is the retrace, target has been hit. So now we're getting the response off of that. So where are we likely to go? Well, if this is a completed A in the same fashion, I would pull the dominant pivot to the low where we had target. So here's where we're looking. So you can see the lines I have drawn already. Shit, I guess I've got to go back to a 1 hour here. All right, so just using prior structure here. Areas that were, obviously this was significant to the market. You can see resistance, support, then it goes. So these would be areas of interest. Right? As the market is coming back, assuming we're going to make a retracement, we're looking for at least the 50. If we're going to get a B to a C, so we can look down here and say, well, that would be the algo target. But if we're going to go all the way down here to this 50, we're going to be looking for a much bigger move. All right, so I don't want to assume that. So first we've got to see what the reaction is here, and so are we going to follow this algo path, right? And remember, you trade them till you fail. So if it does that, Well, then the question is, what are we completing there? Right now, we can get the 5 in here, and we can see the reaction off of an algo target. So it wouldn't surprise me that we're going to try and push and at least get 50% of this. So thus the idea that we'd be looking for the B here. Now we're going to revisit this trend line here. It would be interesting to see if we can get through that. So something has completed as we start this retracement here. All right, so opportunities now certainly on the short side as we've broken enough significant levels here. So even, I meant to show you this. So even if we go back here, and let's see, I've got to go. Oh yeah, this is what I want to show you. So from in this swing, let me get that off of here. So this is the lowest low we could use relative to this, and we've broken the 65. So even if we take the absolute lowest low and don't regard where we think the 4 is, we think this is an ABC, we've broken the 65 here, right? So next, so from an algo's perspective, in terms of what they're likely doing, since we've broken that 65, we know there's going to be participation on the 50 all the way back. So we're looking for the B to the C there. So with that said, I think that was I meant to show you that here. So with the break of that 65, the next trade is certainly setting up to be right in this pocket right here for a potential short. Right? We've got first algo target, second, third would give us the big move here. So if we get that turn, you want to, if you're going to ride that, if you could catch it with 2, maybe you have a partial here, and if you're going to get a runner here, this would be your next target. Right, I know that's not easy to hold that long, but just analytically, if we look at where we're likely to go, if this is going to do a full retrace, that's the target. Okay, so with that said, now let me pull some of this off because there's some nice overlap here of what we've been working through amongst members here in some of the Gann trading. So let me go back to, let's go to an hourly. All right, let me clear some of this up. All right, so part of the reason we were trying to focus on some of Gann's methodology is because so many traders, they kind of get the paralysis of analysis with the Elliott Wave. And as we go into complexities, and with so many of you tracking crypto, as crypto and particularly Bitcoin is in some sort of a, God knows what the Elliott count's going to end up being, that there can be this paralysis of analysis. And as I will often try and remind both YouTubers as well as members here, in terms of my prioritization of the essential tools, I will always tell you that the retracements that we trade off of, whether we're using Gann and Elliott's retracement, is going to be very, very close. Regardless of what methodology we're using, the idea of swing retrace or the idea of rotation is the most important skill to understand, right? Then next would be market geometry, and the third is the Elliott Wave, right? So do I use it? Of course I use it. But it's not essential. What is essential are the rotation, the idea of swing, retrace, or rotation, and the market geometry. Yet with the, I don't know, it's over 1,000 members now, traders that we've been training, where do they all focus is on the Elliott Wave, right? So the idea of introducing some of the Gann methodology is that they're very complementary, but it reduces all of the rules and the complexities of Elliott Wave, which is why we started to introduce that, because we had just had too many members getting too caught up in all the nuance of Elliott Wave, all right? So let me just show you how we would approach this. So I'm going to take, I guess we'll leave the lines on here. So I just want to clear the chart. So we have some sort of a pivot high here. All right, so as just to review here, we're looking to range the market. So first I'm going to do is I've got to change my tool. So what I call the wolf range, simply because that's the guy taught it to me. So the idea here is we're looking to find the range of the market, is the way Gann described it. So we'll be looking for the range. So the first little move that we have down here is how we're trying to identify where the range is. So if you see this little swing here from the pivot, this is the first reaction I get down here before I start a retracement. So the key level that we're looking for is what happens at the 100, right? And you can see here we get the reaction. So it's a good first indication that I've got a potential range of the market. So let me pull that off. So if with that now established, with that reaction at the 100, now I pull my range down here. All right, so there's my potential pivot here. So I'm using the wolf range here. So note what happens here. So I've established this as the range. Now we're looking for reactions in the expansion. So it's a range expansion technique. The idea being that we're looking for the market to trade harmonically. So the expectation is we're going to come down, react at some of these levels and bounce. So if we come back here, then we're going here, then we come down here. If we're coming back, maybe it's here, we come down here. So the market responds harmonically to these levels. So given what I see here, it looks to me like this is a pretty reasonable potential range of the market. So here's 100%, 200%. Here's the minus 150, the way Trading View, you have to orchestrate this and align it. So here's the range. Here's the one. Now we're just doubling the range. Here's 100% doubled. Here's 200, 300 being the extreme. So you can see here's the 50, right? So of this range, here's 100. Here's the 50. We're reacting. We got a reaction at the 200, reaction at the minus 250. They haven't been to the tick. This one to the tick. So if we pull down here and think, okay, maybe I've got a new range of the market. All right, well, so if this is my new range, now I'm expanding that range down, looking for the key number here, which is why it's in green, would be the expansion, the 100% expansion of that range. Right now, it still looks like this is our range right here. So it's a bit of a tell here. So the fact that I've got the 50 here and I get that reaction suggests to me that this is now good range for the market. So anticipating where we might be going, well, there's a couple things that we could do. So using the Gann tools here, which is going to be slightly different, if we take the length of this swing and we project from this pivot, then we're looking for a reaction down here. So from the pivot, projected from this, so you would understand why. So here's 100%. So here's the minus 150 right on top of the 100, because we're taking, since in the wolf range, here's the range, here's the 50, here's the next split of that range, which is right on top of the 100. So we get this confluence here, right? So this would be a logical place to look for the next reaction, right? It's the expansion of the range projected from this pivot. Now, why does it stop here? Well, let me just change this so you can see what I'm doing here. So I'm going to change that to the Gann expansion. All right, so with that, what we do is we take from the swing low, we just double click there, and this is damn near to the tick if I've got this exactly on there. Okay, so here's the range. We're not worried about what happens here. We are simply taking this swing and we're taking Gann's numbers, which he divided the market in. So he halved it, quartered it, eighth it. All right, so if we looked here, this is the 0.125, here's the 0.25. So from that swing to extension, well, now take note here for those of you who haven't been through this training, if I go back here and I put my traditional measured move on this, right, see how they overlap. All right, so there you have a good example of you can understand why this was turned into an algorithm. Here's the front run at the 50. Here's the algo target. Here's the Gann expansion. Here's the Gann length, right, expanded. So we go 0.25, pardon me, 0.125 to the 0.25, and you look at the overlap, right? So it's a confluence of methodologies here and market geometry and mathematics at this level, and we get the reaction that looks like the Gann actually got it to the tick. The algo went through the negative 23.6. Right, so we have some confluence there. So right now it would appear that this is good range of the market, and the market is responding here. So let's just pull that off here. So we'll go back. So we have our range of the market established. Here's the range. Here's the 50. Right. Here's the minus 150, negative 100. So you can see that overlap of methodologies here. Now, additionally, since we have a fairly good top here, this is not a bad spot to put on a Gann Fann. Looking for some time components, because note here we're very steep. So for median lines, we don't have enough of a pivot. So let me show you what I mean. So even if I take the pivot here and pull down here, can I get that on there? Yeah, but it's so steep, I don't like it as much, right? Because of the steepness of that. Now, if we get something over here, I'm gonna like that better. But right now, I think this looks more like an example of when we could use a Gann Fann. So when you're using a Gann Fann, of course, we have to lock the scale. That's the most important thing you have to do. And just as a caveat, if you move things around or you hit auto, it will unlock the scale. So you have to constantly check to make sure that you've got the scale locked, or once you lock it, don't move it. So the easy way to do it is just to make sure you've got from that pivot. Let's put the magnet on so I get right on there. I generally don't like the magnet because it's kind of annoying. All right, so let's get our 45-degree angle. All right, so I see we're not right on it. There it is. All right, so the magnet can be a little annoying because it's hypersensitive. Okay, so I've got my 45-degree angle. So let's get our Gann Fann on this, and let's work right from that pivot. We just take the center. The red line is our 1 by 1. All right, so that's our key level here. Now let's think about Gann's retracement levels. So if we go swing high to swing low, all right, so I'm going to go back to, let's put the Gann numbers on here so you can see all of them. All right, so here we're dividing by 12.5. So we get 0, here's the 12.5, 37, pardon me, 2.5, 37.50, 50, 62.5, 75. So you see the overlap. 50 is the most important number for Gann. So, and then 62.5, it's essentially at the 618. So if I put the fib numbers on top of this, you'll see the overlap here. So put this back. We'll go back to our measured move, right? So you see, so here's the golden zone, right? Here's the 50 on top of each. So the 37.5 and the 38. So you see how they both overlap, right? The difference being we've got the 12.5 and the 0.25 when we're doing extensions, but you see how they're right on top of each other. So you understand why these were likely turned into algorithms, because of that overlap of methodology, and the markets respected, particularly the S&P. Respects these incredibly well. So now I got to be careful. I just tried to move it, right? So I kept the scale locked. So here, what we're looking for. So let me take this one off. All right, I've been using these gold numbers because they stand out. My partner Quan uses these, so they stand out so nicely. So we're looking for confluence. So we're pretty obvious. It's staring you right in the face. So there's the confluence. So we have a combination of these prior structural levels in the market. We have our 1 by 1 Gann line, right, which is the important, sitting right at the 50. So what I was doing before is, just as it was taught to me, is that we always want to look here, but when we're trying to get the range of the market, and I call it, so here's the wolf with the 25s in it, right? So this is the 2.5 here, and then we'd have push. I got to take the scale off. I got to unlock the scale so I can show this to you. So here would be the minus 25. So again, in the wolf range, we're just taking 100% and dividing it in half. Well, all I'm doing is adding the 2 5s, right, to give you that quartering. So if we look here in terms of where we initially went, so here was the first range. Then we try to establish the range here. Are the 25s influential, right? So if I take the lane here, so as I just showed you, the minus 2.5 caught it to the tick. So just as we were doing before, it's just a different way to do the same thing. So if I take this and then I double click there, it's just giving me that expansion. So here's the 0.25, here's the 2.5. It's just a quick way to get a length of a swing, retracement, great. Now where are we going? You see how that overlaps with that algo target. So if this is going to continue to go, right, so if we expand the range, where are we looking for? Here's the 50, right? So the way it was taught to me is we're trying to, I just use the 50s. I'll add these if I see it, but you're never going to miss a 50. So if this is the new range of the market, what's important is the 50. Now we add the Gann Fann and we have confluence here. So if this is going to, so then we can also combine just pattern-wise what we would anticipate if this is a completed impulse, right, as it would be with our Elliott hats on. What are we looking for? We're looking for some sort of a 3-trend counter move to correct that. So we trend in 5s, we correct in 3s. So if we're going to get something like that, right, there's a roadmap. Right now, we're just using a little bit of Elliott Wave combined with just the most rudimentary conceptually. We trend in 5s, we correct in 3s without getting into all of the exceptions and the rules and all of the nuance of Elliott Wave, which is why we wanted to introduce more of the Gann methodology, because it simplifies it. It takes that rule set out. Now, some will find that rule set is the appealing part of Elliott Wave. Others find it's the most annoying because it's Oh, the idea being that there's always an exception, right? So I would tell you that's not true. The rules are the rules, and if you follow those, they will keep you out of trouble. But if it's causing, when I started with the idea that it's paralysis of analysis, because you don't feel like you have the count. Again, it's the last thing to focus on. You do extremely well just focusing on rotations, the idea of swing and retrace, with targets with some market geometry. Right, so here, since we don't have enough of a pivot, it's too skinny for median lines. So then I defer to the Gann lines, and look here, this looks like a very nice confluence point. So a hell of a long way to go to get there. But if we're looking, and then additionally here, note we've got this as well. All right, so I wouldn't ignore this. These are levels that the market has responded to previously. So prior support, potentially resistance, maybe. Right, this whole area is of interest. You can see here it was support, right? Does it potentially? So this whole zone would be of interest to me as the market is coming back up. So right now, all right, if you were looking, right, so that's not a great place to be a buyer. You don't need to pick the low. But so the idea here is it's a target, not an entry. The idea is not to be looking for entry off of this, even though that's been a hell of an entry. It's just noting that we got the reaction there. So we have a technical pivot here. So thus, this becomes the next opportunity, as far as I'm concerned, in terms of a swing trade, where we might be looking for that reaction, right? So, I undid the lock. So you see it moves a little bit. So now once you get it dialed in, now you got to lock it and then leave it alone, right? So here's where we're looking for the reaction, right? That's so a long way back. Right now, note, right, of course, we're right in the middle of earnings season, and so far the earnings have not been terrible. Certainly the tech earnings haven't been terrible. So thus you see the market responding after the big down day yesterday. So right. So the technician makes the assumption that everything that can be known about the technicals is factored into that price point there. That's where we have agreement in the market. We have buyers and sellers agreeing there. So thus transactions happen there. So we don't want to be ignorant to what's happening fundamentally, but we defer to what's happening technically with regards to how we approach the market. So that gives you a few things to look at and to think about. Looks like whatever has happened here is likely complete, and now we're in the process of correcting that. Now that we take out that low, then we'd start projecting again much lower. But right now, that looks like whatever was happening here, this swing is complete. We had a full thrust and the rotation. We went right to a target, both a Gann target and a fib target, and now working through the correction of that. Now, you would, of course, not want to ignore this. So that was as that retraced here. So if we go here and we think, where's the 50, right? So I have the wolf range on here. So from that, if this is a new range of the market, this 50 would be a likely spot where we might expect a reaction for the B wave. All right, so, well, pardon me. Of the A wave, so let me label it so you get what I'm trying to say. So if this is going to come up and we're going to do a 3 wave, if we got a reaction here, that would be not uncommon. Establishing the range, here's the 50. If we're going to come back down, these would be areas where you'd anticipate a response or a reaction in the market. Right, so again, as Gann would suggest, that the market tended to move harmonically from level to level. So that would not surprise me at all. But here's the next big opportunity to be a seller. But that could, it could be there this afternoon. Who knows? But it's going to take some work to get back up there. All right, but next opportunity is on the sell side. All right, guys, with that, I'll wrap it. I've got one more to do today. We'll look at something in the FX market by request. All right, back to you.